we all hope so. Yeah, I don't know. Yes. So just how we always sort of go about this. Thank you for having this call and this discussion session. Just to sort of catch up on how the company is doing, how things are. You just give us a quick update, and then I have a couple of queries, and I'll jump into that.
Sure. I mean, as a follow-up to what we discussed last time in our previous earlier meeting, we are on track in terms of rolling out our investment program, fixed income uh, book, because we're taking advantage of the prevailing interest rate, and so the book is much more healthier now in terms of both revenue flows and in terms of capital deployment. So from a much more cash-rich environment, say a couple of years back or a year and a half back, we are now more into fixed income and equity mandate, which has been slowly being rolled out, and the benefits of that is being felt. But more importantly, I think going forward, we should be able to take advantage of it, given the way the expectation of interest rates changing. So that's where we are.
Now, I've noticed that, like you said, you had a cash balance of almost 4 million at the end of 22. That's down to 1.7 million. Your investment in bonds or fixed income is at 2.95 million as of the end of first quarter.
Yes.
And it's the right sort of environment to have fixed income exposure.
Yes.
And given where things stand, I mean,
Yes,
if you
but
hear
at the same time, we are also exploring a lot of opportunities in terms of looking at creating long-term assets. We are looking at deals in the region and in both in Oman and outside. So at some point in time, that portfolio would migrate into a more strategic long-term investment. But
Yes, makes sense.
that's the ultimate goal. And at the
Right.
subsidiary level, we have this large, real estate, which is
Kalhad,
in
yeah.
place, Talhat, which is in place, and
Right.
that is also creating cash flows. And
Right.
going forward, we're, trying to, make sure that the tenant who has been with us for such a long time continues that relationship. So that conversation is going on, and we'll update you once we have a final.
Sure. Now, two things on Kalhat, Rajesh. Firstly, you mentioned in the management commentary for Q1 that there was a slight dip in your rental income,
Yes.
if I'm not mistaken. And so, if you could just elaborate on that and sort of outlook for 24 versus 23. And second is, this property was handed over in 2002, if I'm not mistaken, for a 23-year period, which has an overall lifetime of 50 years, so it's extendable. So if you could just touch upon sort of that and what the strategy around that is in May 2025, when the initial 23 years get over.
Sure. So let's take that in two forms. One is the income side. So essentially, this is a lease rental, not the rental model that you generally see where you collect the rent and take it to your profit and loss account. This is in the form of a lease rental, which is a leased asset. And, it's very similar to the EMI concept where, as your repayments, the P&L impact of it will significantly reduce as it comes closer to the maturity of that lease period. Now, as you correctly said, the land on which this real estate sits is for 50 years or 49 years, and the lease agreement is for 25 years. So come 2024 December, this lease agreement comes to a halt. Now, we are in constant conversation with our tenant, which is a single tenant of one LNG. And so we both are in a lot of discussions and negotiations on the extension of that lease agreement beyond the period ending December 2024. Of course, since it is an SAOG company and negotiations continue, it will not be correct on my part to make a comment on it. But all I can say is the talks are positive, And we are looking forward to kind of, bring out some document which extends the period of lease beyond the current lease agreement. But as I said, unless we have a firm, it's not an official stance. It is basically negotiations are in progress. Now,
Understood.
what that would entail is that when you have a continuity of agreement, if it does happen, that asset is secure in terms of long-term cash flows, and that also would mean that the subsidiary that operates this asset will continue to prevail.
Okay. And the initial lease was up till December 24, and you have another 25 years usufruct. So would the subsequent lease also have to be for a 25-year period, or it would sort of be for a shorter period with sort of additional, let's say, incremental extension? How would that, just in terms of the mechanics of it?
There's been a lot of chat and conversation on this about the validity of the land itself and the nature of which Oman LNG itself structures its short and long-term contracts. So we are actually in that phase of negotiation where it could be, what would be the nature of the longevity of the contract. And while it is a hard asset, right? It's a residential property, it's a hard asset, and it's already in place. So the validity of the use of agreement remains. Now the negotiations continue as far as to figure out what is the tenure of such lease. So it's early times to confirm what is the longevity of the life of that extension, if it happens, or if and when it happens.
Okay, noted. We can take this conversation in the subsequent quarters. Now,
Yes.
You mentioned that this was an EMI sort of, not a straight up rental, but an EMI concept, where effectively the cash flow to Sharkia remains constant. It's just that the split up of that cash between interest and principal is what varies. So that's why as time progresses, you'll see a sort of lower number on the P&L, but the
Yes.
cash flow would remain constant on a monthly basis or on a periodical basis. That's right.
That's
Okay,
correct.
okay. So from a reporting perspective, all other parts of it sort of neutral.
Yes.
This particular component, which is interest expense, would be interest income would be lower. Fine, got it.
Yes.
That's on Kala.
Yes.
Thank you for the clarification. Now on the investment book, like you said, and I've seen that sort of it makes sense to sort of strategically look at investments, and you've been active on that front. Just to sort of elaborate on that, it's private equity, public equity, sort of what regions, any sectors sort of favor, or you're agnostic to sectors. If you could just give us some flavor over there.
Well, we haven't really, in the past, we haven't really explored private equity for different reasons. But at this point in time, the focus has been largely on listed GCC equities and fixed income in the public markets. So liquidity is one of our focus areas. So we've been kind of focusing on the public markets. So fixed income, largely European, US centric fixed income, and equities largely centered around the Middle East or GCC, let's put it that way. And this region is providing a lot of opportunities in the listed space. But having said that, we are constantly engaging with a lot of people in the region to look at long-term investments in the private space with the intention of going public, or where there is a clear exit clause. So that conversation is happening with number of people, but it's too early to kind of put a finger to that. You mentioned that we have the cash, so that also gives us the firepower in terms of wanting to do something which is works for us. And when I look at it, I'm looking at it from a longer term perspective, 5-10 year kind of perspective.
Got it. Interesting. Okay, makes sense. Next thing, Rajesh, I noticed, and I missed this I missed the call the last quarter. I noticed this it actually happened in the fourth quarter. If I look at Sharkia Investments, you own 600,000 shares there. If I look at Q3 and Q4 of 23, the value shot up from 890,000 reals to 2.2 million reals. Apologies, I missed that. So if you could just sort of elaborate on what happened over there, because the value sits at the Q1.
You're referring to FEOCI.
Sharkia University, sorry. Sharkia University. Yes.
Yes.
Yeah.
So we have a set of investments under the FEOCI investments which we have an investment in Sharkia University. And that's been a university which we have invested from the time it has been founded. So,
Right.
and that has played a good role in terms of building up resources in the last couple of years. In fact, not couple of years, more than a couple of years, I would say 5 to 6 years. So today it has reached some level of maturity. There is about a little over 8,000 children who are being, who are students in that university. So every year we do a valuation based on a DCF kind of the, and this university over the last few years has shown steady growth, but now it has post-COVID and post-corona, a lot of things have fallen into place. So the valuation has been upped to that current level. This is reflecting the confidence and also the sheer momentum of the number of student intake, which has gone up exponentially in the last 2 years.
Okay, interesting. All right, but in terms of sort of, so it's an investment that you sort of sit on. There's a markup in value, but that doesn't lead to any sort of cash implication. It would just be a sort of book entry value, right?
That is correct. At this point in time, it is a mark to market.
Understood.
Reflecting a DCF valuation, basically.
Yes, sir. Now, among the three companies that sort of you own more than 5%, you have Oman National Engineering and Al Jazeera Services, which are above your cost. Yeah. National Gas, I know they've sort of been trying to restructure. They've sold off a few assets. They're quite sort of optimistic on the call. What sort of discussion have you had with them, and sort of what's your takeaway on the future of the company? Because gas prices, no matter how much we've sort of heard being the pivotal factor, we've not seen any inclination from at least so far from the government of revising those prices. So effectively, how do we sort of see a turnaround? There's only so much you can do in terms of sort of reorganizing your balance sheet. But when it comes to sort of the core product, which is, let's say, range bound, and your input costs are going up, how does one sort of turn around that kind of a business? Could you just give us some sort of, from your perspective, what discussion you've had as a shareholder?
I think all the points that observations are spot on. There is a challenge in terms of pricing here in the money markets, which is the home country. They have investments in Malaysia, which is doing quite well in terms of both volume and being a very competitive environment. They have been able to kind of keep their market share. They, in terms of other activity, kind of downsize their investments in UAE, and they're looking at expanding into the Saudi market, creating more footprints into the EPC markets. But having said that, it is transition in progress, because they have reduced their debt significantly in the last financial year, and kind of that has created a little bit of firepower as far as the company is concerned. But the overhang continues to be the gas prices locally, which is a controlled mechanism under the ministry. And that is always going to be an overhang. So the challenges remain, yes. Company has got a new management in place that has been in place for about a year now, a little less than a year. So they are trying to broad base their investment flow. So at this point in time, we are staying invested, and we kind of engage with the management as often as possible. And we are kind of taking a wait and watch approach about what those new initiatives are going to be, or how it is going to translate into meaningful numbers. So at this point in time, it's more of a wait and watch. I think the critical factor here to talk about is the fact that they have downsized their debt, which was quite a big overhang given the interest rates that one has to bear.
Sure, no, you're right. I definitely see sort of incremental improvement across the board for companies that have been able to, downsize their debt in an interest regime which, completely took off in last year. And contrary to popular belief, we thought interest rates would start declining probably as soon as second quarter of this year. And now it's anybody's guess if we'll see any sort of rate drop or cut even in Q4. I mean, there are some sort of Goldman Sachs gives a look saying they might even see rate hikes. So it's anyone's guess in terms of what the debt burden might be for 24. I think probably it'll be at similar levels of 23, given of what we hear. So that's at least encouraging to hear. Yeah, and let's hope they can take it from there. Yeah. Rajesh, that's it from my side. Always a pleasure interacting, and wish you all the best with your strategies and look forward to interacting on the next call.
Thank you, Bishan. All the very best to you and your team, and convey my regards to your members. Thank you.
Okay, thank you so much. Take care.
Thank you. Since there is no other participant, I think you can close the recording.
Yeah. Yeah. Okay.